Okay, hello traders, and welcome to this intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 7th. Great to be with you guys this morning. Eman, Jay, Peter, Pete. Great to see everyone this morning. Happy New Year, in case I didn't see you yesterday. So we did go over in depth. I kind of went nuts on Daily FX yesterday on most of the setups we covered, but we still got to take a quick review today. Dollar still holds, okay, that kind of near-term range near trend lows. The risk is still there, okay, for a little bit of a recovery. But at the end of the day, we'll go over levels on their own merits. DXY, Euro, Sterling, Aussie, Kiwi. From last night's update, we'll hit dollar CAD, dollar yen, dollar Swiss. Nice update there as well. Reworked that slope last night, looking good. And we'll round about with gold and crude. So crude, the resistance region that we just touched on yesterday, is holding. I'll be putting out a weekly piece today, but just an area to look for, I think, similar to gold at key near-term resistance. Any other questions or trade setups? As always, guys, feel free to throw them on the message board at any time. Here's what DXY, well, here's what it looks like into the close of last week, right? It's this same downslope that we're working with. Here's the daily chart. You can see it right here. We're just sitting on that slope. So I'll recall real quick, you guys know this chart, the weekly, the slope off that low that we made in June of last, well, at this point, it's 2018. Caught the lows last week, and this is the focus range right now for the DXY, okay? You've seen some long wicked tails here, not really the best thing you want to see, right? Could see some more back and forth. Focus is lower sub 97.87. Next key support barrier is 95.98 into 96.14, last year's open, and 100 off the high. So that's still my main support, just below slope. That's still going to be my near-term bearish inval resistance, 97.87. Right now, the focus on the weekly chart is whether this recovery, fails at that slope, or whether we actually break the downslope and go for the drop into 96. Here's what it looks like. Okay, so again, the daily, well, let me show you the daily chart first. Not really the hottest thing, right? Still leaves that room down here, 96, 95, 98, 90, 96, 14. Really nice spot. Do we go for the recovery first? Okay, and this is the 618 of the range from the advance off the June low. So we're still within the confines of that range, keeps that retracement viable. We've seen nice pivots there. But yeah, I mean, for me, the focus is just on this recovery. Is the recovery going to get a little higher to get us a short position from a better entry? So that's the daily chart in the DXY. Here's what it looks like in the intraday. There's not much to get excited about, but here's the near-term recovery, I think. So here's your weekly opening range high. It's only Tuesday. We're only kicking things off here, but just a little bit higher in your 9690s, let's call it. 9711, 9730, both levels that we had noted, sort of the zone which we'd want to look for possible exhaustion on the upside if we get there. So no change to any of those levels from last week, okay? Just pivoting off the same regions. Upper parallel comes in at that 618, still 9730. Now, well, you guys know the downside target, so nothing changes there either. Any questions on DXY? Biggest player, obviously, we have the non-farm payrolls on Friday. Don't forget to take a look at that. Anything that goes down with, the headlines as far as the Middle East or China deals will be variable. We'll take those as they come. All right, Euro, number 2. Here's what Euro dollar looks like. So we warned about the risk of this into the open of the week. The region in focus is 111.86 into 112.09. Y'all have heard me talk about it before. Big zone, Fibonacci resistance. You had slope in there. You had former swing highs there. Just a nice zone. Add to that the weekly chart. Take it from a top-down approach, okay? The 618 of the drop from the highs that we made back in June, and the broader 618 of the entire 2017 rally. Remember, so this zone has been something we've been watching literally for years at this point. Basic slope resistance off last year's high, right there as well. That's the zone you need to beat to mark resumption to finally validate a larger breakout in euro. So we're not there quite yet. As we were heading into the start of the year, it was kind of the focus. Look for a reaction at this level. Here it is. Now, I don't want to get too overzealous with it. If you're holding a short off this region or you're trying to play the pullback, it's warranted both in time and where we are in price, just to be really nimble, okay? Not to press too hard. Here's what we did yesterday. We failed right ahead of 112.09 again. The high registered just below, I think it was like 112.06. And here's the pullback. We're sitting right back on that slope. If we make it back below, okay, it opens up the corrective possibility for a new low in price before we resume. Not the ideal scenario. I was just looking for a near-term pullback. We'll see the near-term chart in a moment. But that's sort of the threat, if you will, if we push below like 1150 on a close basis. So that's the close low, by the way, that we made on the 3rd. So here's what it looks like on the intraday. This is what matters. This is what I'm looking at right now. And this is what I showed you guys into the open of the week on Sunday. So we popped through, we 1186, failed right ahead of 112.08. Here's the pullback. Again, it's just a very clean weekly opening range. That lower parallel converges on the range lows for the week. Oh, let's call it 111.50s, like I just said. So if we get below that slope, all right, the corrective drop, maybe 111.40, maybe 111.10. We'd look for exhaustion, a possible entry somewhere in this zone if we get it. But that's sort of the near-term threat I'm thinking. If price sinks 11.50 today, if price sinks 11.50 today. Now, ultimately on the top side, the levels are very clear. 112.09, once we get through that, you got the August high, 112.50, we just missed that back here. And then the 100% gets you 112.80. So very clean levels as far as the targets. It's just, looking for entries, exhaustion on this pullback here. So this is the 240. Here's what it looks like on the 120. Still pretty clean. For all intents and purposes, we haven't done anything, right? Here's your weekly open. We're testing weekly open support basically right now. And then this is just the stretch that you made into the open yesterday. You've been dribbling down ever since. Near-term range, right below resistance. Look for the break. Questions on euro? All right. So I'm kind of like a laser on this one, and Aussie and Kiwi, obviously the biggest movers, which we'll talk about in a moment. We covered those this week as well. I just want to touch real quick on sterling. There's been a lot of questions on this. The slope has just been holding. Okay, here's what sterling looked like again into the open of the week on Sunday. We were trading right here. We said, look, could possibly see another stretch, but basically, the ideal scenario is to look for a new low in sterling more so, I think, than the others. You're not as close to the weekly opening range low. That gives me an indication that maybe it's the opposite sort of trend, meaning that the pressure is more so on the other ancillaries than sterling per se, and it might not be the best bet. But at the end of the day, we failed right at that slope. We were looking for possible exhaustion off one of these two levels. If this is going to work, it needs to follow through and at least make it below 30.50. Ideal scenario, you get down to like 29.90s and then look for a reaction there, depending on where that is in time. 29 is like rock solid support. That's huge. Last month's open, 618 extension, 38.2 retracement. It's loaded. But that 29.90 keeps us within the confines of this pitchfork, which is just a high, low, high. Really nice and really nice, right? So we'll see if sterling can find some rhythm here to get us at least for a dip towards that 29.90 level. If not, if slope breaks to the upside, wouldn't necessarily try to do anything. 32.80 into 33.10, that's still the bearish inval. So that's still the level that we would need to kind of clear to validate the resumption of the broader uptrend, right? We're still bullish sterling longer term. we're just looking for the pullback on this one. Questions, comments, concerns on sterling? All right. So Aussie. Here's what Aussie looked like right into the start of the week. And here's Aussie now. So the weekly chart, man, we talked about this yesterday in the webinar, the turn, where it happened, how it happened, back below 69.27 here, which is the 618 of that recent drop, former swing highs from November and October. The next, I just wanted to highlight on the daily chart, right, or the weekly chart rather, the next major support laterally into like 67, 68. I'm sorry, 68.27, which is the 2016 swing low, the swing lows that we made back here in June, and basic slope support. No need to complicate things. So the fact momentum turned at 60, if the breakout is going to sort of find a corrective pullback, there's still room on this drawdown, I think, now that we're breaking support. Here's what Aussie looks like on the daily chart. Now, again, if we were going to hold 69.27, which is what we talked about, the median line, that would have been like the ideal scenario. The breakdown opens up. Here's those former swing highs, 68.62. I think I talked about this in the webinar yesterday. Just ahead of that 68.27 level. 68.62. Give me the former swing highs, downslope support, and current uptrend slope support. So a little bit lower. See what kind of materializes here. Here's the scalp at this point. Okay, and here's what it looks like to start off the week. We talked about the significance of 69.24, 69.27 for a while. Former swing highs, like I said, former swing highs, break, and it converged right there, right? We set up a little bit of a, didn't quite get the drawdown there on Friday, remember that? And then here it got spiked down yesterday. Here's the break, accelerated drop. No reason to really dismiss this, okay? So the break is the break. Below 69.30 at this point, you have to be looking for that drop towards those downside targets. Now, 68.50s is the 50%. I don't really want to stress that per se. I still think you want to look at this level here. So I'm just going to copy it over. That lateral level there gives you a little bit better of a pivot than the 50%. And then obviously that 618 is going to be a big player if you get that down there. But let's see what kind of reaction that we get on this drop here. Nothing to do on the short side here if you're not already short. If you're looking for new positioning, we'd need a pretty radical, pretty impressive reversal pattern to try to fight this or fade this until we get into a little bit more of a concrete support barrier. But what a drop. I mean, you're seeing the same thing start to materialize in Kiwi, although nowhere near the same magnitude. Kiwi, unlike Euro, unlike Sterling, unlike Aussie, well, Aussie is a different play at this point, has actually already broken the weekly opening range lows, right? Where Sterling and Euro are kind of sitting there trying to make the move. Here's yesterday's low. Here's slope support. Got to get below 66.25 on this one to get the kind of move that you're getting on Aussie. So not quite as a go, as it were, but looking for a reaction today in this zone between 66.25 and 66.33. What else can I say on? Here's what Kiwi looked like into the start of the week, and here's what it looks like now. So again, a trade where the slope, guys, is basically all we needed. Here was the Sunday open. We rallied into the upper parallel. We said bearish invalidation was still at 67.11, 67.05. We came into that parallel, it held. We tried to test it again, it held. If we break below here, it's all about the median line. Okay, the median line crack here, I think, would give us the tell if we're going to get a larger spillover like we did in Aussie. But I'm looking for some sort of inflection like here into the open. Okay. All right. So any question on either of these? The only commodity we didn't cover, or commodity currency we didn't cover, is dollar CAD, and we'll do that next. But um, of Aussie and Kiwi, for Aussie, you're looking for near-term downside exhaustion, heading towards 68.60, 68.50s. Don't try chasing this from here. There's no viable stop that you could kind of maneuver on this one to the downside. So we're gonna have to wait this one out. Kiwi hasn't seen the break. We're looking for inflection in US trade today. CAD looks like this. She's a trickster. I'm not sure if it was someone from the room here or someone, well, it was someone in Daily FX yesterday who was saying, man, this thing can't just rip higher. It needs to sort of fake out lower. I think that might have been it. We'll have to see. The focus at this point is on the fact that if things close as is, all right, you've already put in an outside reversal candle at the lows. So the whole game plan, if you guys recall, for dollar CAD was that we were opening at support. Here's what it looked like last night. So the level's 29.71. We talked about it forever. It's the 100% extension, 786 retracement. Slope support was there. Just a really nice sort of overall target. Here's what dollar CAD looks like on the weekly. Okay, 29.72, 100 off the high from the year there. It's right there. Here's dollar CAD on the daily. Same slope. Here's one just off of the highs that we made from September and last month. There was a 25% line. And again, the median line is still at 30.50, which is the 38.2 of the advance off the lows you made in 2017. Also, those former swing lows is all in this range. So it's a bit coiled, okay? You see some divergence into the low, albeit divergence below 30, which is not going to be, or 40 rather, so it's not going to be a sort of your ideal play. But if you're going to get some sort of near-term recovery, as we were looking for in some of the other dollar crosses, kind of makes sense to start looking here. So here's the intraday, okay? It spiked lower, but not by much. You didn't even get a test of Friday's low, which still has me concerned, to be honest with you. But the ideal scenario would have been to fade a spike into the parallel for the rebound. If we don't get that pull down again, 30.50, okay? I had 30.86 earlier in the week, guys, as the bearish inval, which is going to be the October low day close. It was converging on slope. I'm still going to I would still necessitate a breach above that, I would say, to make this thing, to invalidate the downside bias. But for now, the focus is on this recovery near just the slope or the channel resistance off the highs that we made in December. Still think you can get some play here. Not an aggressive trade. It is counter trend. I'd rather be selling rallies, but for near-term guys who are looking for like the immediate scope heading into US trade, you could see a little bit more of a fluff higher here in dollar CAD. By the way, just saying that as a caveat, guys, the dollar is stronger against every single major counterpart heading into the US trade session on the day. Even yen, which has just been sort of pitiful right now, is flat. But Aussie, biggest loser, down 1%, Kiwi down 0.5, Sterling down 0.38, Euro down 0.27. So, leave the daily trend as it were, at least, is there. All right, questions. Speaking of the abomination, here is dollar yen. Recovery now stretching into the sort of key pivot zone that we were looking for. Here's dollar yen as it looked last night. The previous update, which was just the day before, was highlighting the fact that we were opening the week just above that 38.2, that 107 70 target. Never quite did make it down there. 107.74 or 107.70 something was the low. Here's the reversal, and we're right back into resistance. So we took out 108.26, and here we are at 108.50 again. Here's what it looked like last night. Here's what it looks like now. So you're still just holding that 38.2, 108.50, just higher. You have 108.73. If this is still going to maintain downslope sort of status, I really wouldn't want to see things surpass here. And that's kind of what I said last night. I want to, it's going to be based on time. So today, for example, if we were to rip higher, I really would want to see failure ahead of this region, ideally. If it kicks out and there's more lateral movement into NFPs, for example, well, then maybe it is a stretch into 108.95. So that's kind of my thought process here with dollar yen. I do like the downside. It was a beautiful reversal off of major resistance, but the recovery is only going to have so much breath in it. So look, keep in mind also that the objective yearly and monthly open comes in at 108.62, just a bit higher. Don't want to necessarily try to fight this. It's early in the week, guys. It's early in the month. It's early in the quarter. Let's get a feel for this first, especially on the abomination before we get all emotionally entangled. But I'm basically looking for topside exhaustion. Ideally sub 109. I don't want to see a 109 clip, but that's the bearish inval. Questions on dollar yen? Kind of something like that. It's the 120 minute. Okay, that is number 7. We are flying through these. Dollar Swiss. So I reworked the dollar Swiss levels. It took me a while to do this one, but I think we're on to something interesting here. So here's what I'm working with now. This pitchfork, just off the late highs that we made in October and what is that, November of last year, the lower parallel basically clipped that extension low that we made back into December. And here's the rebound. The 618 extension of the decline from last year's high converged at 67.72. Now, we never got a close below that, and that is now also the yearly open. So there's a lot to look at here. I got all excited. Let's see how it pans out. We basically were sitting at the monthly opening range right above support, which happens to be not only those key technical levels and the yearly open, but also former swing lows, former close lows of the previous year. So a nice spot. Major key resistance on this one, or at least initial major daily resistance, will come in at 97.70. So you got if the dollar recovery does materialize, this would be something I'd be interested in. Broader picture is bearish. If we were to get a rally there, I'd be looking for entries. I'd be looking for shorts, because I think, again, the broader picture here is going to look for a break of this range if we get it. So interested in dollar Swiss, let's just say that, okay? Here's what the intraday chart looks like. So there's that same pitchfork right off the highs. 2, 3, lower parallel. So even if we're going to get just a near-term recovery, you'd still see 97.70 as something that we could get on tap. Now, one thing I was kind of tempted to do, I didn't want to mess with you guys and too many assumptions, but even if you were to get a corrective bounce, look where the 100 comes in. I mean, it's just too clean. It's just too clean. 97.74. So I'm that's kind of my thought process. I don't want to assess anything beyond a lot of the trades, a lot of the near-term things we're talking about today, guys, are counter trend because I think we're all in agreement of the broader moves here. But there's opportunity there if you stay light and you stay nimble. Um, of course, recognizing that we're in a very treacherous time to be too aggressive on the intraday, but um, the levels and the setups are there. So that's what I'm looking at with dollar Swiss. A break below 96.72. Well, that would just have. Here's the problem. If we break below 96.72, technically 96.60 is what I think I put as bearish inval. You'd be looking for resumption, but the problem is that slope is right there as well. So not so different from dollar CAD in that this thing could just jackknife lower, fake everyone out, and then find the recovery. I'm more light on just trying to play the exhaustion. You know what I mean? You're gonna try to time the low and try to get the spike low every time. You're gonna get either A, you're gonna miss the trade, or B, you're gonna end up catching it on the way down, getting stopped out and missing it again. So I'd be cautious. I still trade against the former swing low. If it happens, it happens. If I still like it, I always have the option of trying it again. But I hope that offers some clarity. So that's dollar Swiss. And again, the broader picture for dollar Swiss is not even that ugly either. Here's the only thing I kind of wanted to see a little bit more of is whether that basic 2015 trend line, it's only a two tag touch, so I don't want to get too bent out of shape about it. But even last year's opening range low, right? We never closed below. And then this thing last week, although it dropped as low as 96.50s, we still didn't close above it or below it. So, you know what I mean? If this thing were to recover this week and rally or recover, it'll look like it never even probed. It'll look like a touch of support and a rebound off of. So there is, on the broader daily, weekly chart, there is not that much conviction. But on the daily, intraday, still think we're at a really nice spot. Questions on dollar Swiss? Okay. Number 8, number 9, gold. So what should we say about gold? Anyone involved on this? The only thing I have to say, I'll be putting out a piece on this one too tomorrow for Daily Effects, and I really I think you need a bigger pullback before you can get long again. I still think the risk is below 1586 for that pullback, just on account of the technical merits of that level, and everyone's looking at it. Even guys who don't do technicals, guys, even the fundy guys are like, oh, well, that's the 618 of the drop. It's just a popular level. Everyone's looking at it. So, not me was not favoring me at the end of 2019. E-man, on this rally here, I mean, look, the rip late in December should have been a tell right about here when we found not only the first daily close and stretch above that consolidation zone to the upside, but then we followed it up with a second day. Did I think that 1585 was going to hit in the first week of 2019 or 2020 rather? No. If you check our forecast on daily effects, I think that was actually the second or last target. So we got to reassess from here. Here's the weekly chart. We got to reassess from here. I don't really. Let me take a step back. The merits are there from the fundamental backdrop with what's going on with heightening geopolitical escalations, tariffs, and all of this, uncertainty. The environment is there where you could see a stoke in the bid rather for gold, right? But from a technical standpoint, again, it's a bit stretched. We talked about. Did we try this yesterday? Whoops. Right? If you just take some slopes, still could leave us. It still could leave us right there. at uptrend resistance. I'm not saying it's going to be a full-on reversal. We're done, but I'm just saying, it's tough. And seasonals are typically good for gold in the start of the year. It is the start of the year. We're pushing higher, fine. But I ask you from a technical standpoint, from a trading standpoint, how do you get involved in a trade like this if you're bullish? Well, there's just nothing to do up here. There's just nothing to do up here. So near term, right? It's all about 1585. That's the 618. That's where this thing failed. That's now the opening range highs for the week, for the month. Well, I guess you could say for the year. So immediate risk, again, my humble opinion is to the downside. That does coincide with a little bit of a stronger dollar if the dollar affirms. Obviously, safe haven flows if people start freaking out. You'll see that bid for gold also start to come into play. SPX, by the way, I showed you guys just this glance at it yesterday. This it hasn't necessarily marked major sell-off either. We're just at, again, uptrend resistance. Could go lateral, could pull back a little bit. I don't necessarily see this gold rip and the dollar all of a sudden just catching haven bids all of a sudden while we're points off of all-time record highs in stocks. It's just not the haven flow, guys. Just forget that commentary, I guess, for at this point, or it just hasn't materialized yet. I haven't seen it. So that's my thought process above. Pooja says the only thing I can say is that the break above 1586, 1591 will be a runner, and there will be no way to catch up. It happens from here. No idea for support levels. I completely agree with you on that one. If 1586 does break, it's gonna rip. It should. I mean, let's just look back at previous price action as we got into these highs. I mean, things aren't going to slow down if you start to breach major lateral resistance. Again, the target I have on the weekly chart, 1625, excuse me, just a pivot in price, former swing lows from December of 2012, which was post the 2011 high. But I mean, yeah, you're going to be drawing for straws. There's going to be, it's just soft targets at that point. But the risk is there, right, Pooja? The risk is still there. 1586. Don't get overzealous until we mount that on a close basis. So the question is, again, on the near term, is there any structure whatsoever in price? And there doesn't seem to be. Here's the pitchfork that we were working with. Remember, a breach of upslope resistance, as we always note, typically can be the sharpest part of the rally. Well, we got the sharpest part of the rally into big resistance. I'm angry with XAU for missing the big upside, Pooja. Oh, I feel you. I feel you. I have a whole list of trades like that, Pooja, in my repertoire that I have either missed or gotten stopped out of. I feel you. What is the deal? What is its ideal support, please? I can remember was 1555. Do you think it's still the ideal one, Mike? So 1555, remember 1552, I think that's what we talked about in the webinar yesterday. The 2019 high day close prior to the break was 1552. So yeah, you got that support bounce, but the question is, Iman, this is just initial support. I don't know if you want to look for resumption above that. I guess. So look, I guess near-term bullish invalidation. Let me say this, Eman, would be 1520 into 1522. That's the December 2011 low, and that's the objective monthly yearly open at 1520. That's what would just shift the focus lower, period. Near-term support, I don't think it's going to even get that low. Yeah, I mean, I guess 1533. So these would be near-term support targets. Work with 1520. 1522 is bullish inval. 1533 near-term support. I wouldn't necessarily stress this slope per se. When I'm considering these levels, I'm also looking at the lateral considerations to the left just to see if we've had former inflection or not. And I think those are going to be a little bit more critical levels. So, this would be sort of soft. On 1540. And then, of course, next upside target on the breakout. So here's, I know there's a lot to look at here, but just to, when things break out like this, you don't want to get too entangled in trying to get the proper slope and everything too clean because it's just not going to be there. But what I do want to consider actually, bear with me one sec, guys. Okay, there's a couple of different slope interpretations that you can actually work with on this one um, that does actually make sense. Yeah, okay, we can scratch that. Let's work with this one. So here's a 240 minute off the low that you made in October 1st. The secondary high for the October move, and then that low that you made November 26th. Slope gradient looks good as support. Initial 25% line held as resistance. When you broke, you saw acceleration. Same thing on the median line, break saw acceleration, upper resistance or resistance at the upper parallel. I would work with something like this. And if you notice, I didn't change any of the ball, any of the highlighted, confluence spots. And what turns out, 38.2 of the advance turns out to be right at the median line. That's dead. That's solid. That other ancillary target, you can dump that. And this is the same support zone. The slope of the 75% line is in the same zone that we were looking at, 1555, 1552. Work with that. Let's see how that holds. Still working with that 1520 is the monthly open. As bullish inval. That's you would still need that break to kind of put the bearish uh, bias back into play. Eman, does that help? Does that make sense? Even people going crazy here in Jordan buying physical gold feel as war is already lanced. Okay, Michael, thanks. We'll watch closely. I'm very interested, Eman, in hearing that. I'm always interested in hearing what's going on with anyone who's boots on the ground. So let me know, what your feel is on like in it. But price has spoken. It might seem that that's what everyone's sort of doing, but the market is just not working in a risk on risk. I mean, the risk off phenomena is very defined flows, very defined. Bonds start, people, you just see funds right into bonds, risk assets start to come off. Gold will typically find a bid, dollar will find a bid, yen will find a bid. All of these things will happen simultaneously, but there's usually a panic in which you also see broader risk assets sell off more aggressively. That's just not happening. In fact, we just saw highs in commodities. We just saw highs in the SPX. Is there going to be pause? Is there exhaustion? Do we have divergence into the highs? Yeah, sure. But is it a panic risk off mode? I don't know. That's a really hard argument to make, I think. And at the end of the day, it's semantics, right? We're trading price action, not the storyline. So that's everything I have, guys. And again, crude, I just wanted to highlight that this is the chart I'll be sharing on Daily FX. Let me show you today. It's the weekly chart. It's just this very simple level. A 618 at a drop from the 2018 high, the former swing lows from August of last year, the close highs, okay, for last year, all converge right here. Big pivot zone in price. If we get the pullback, sort of 60-40 region, we'll be looking for some support and see if there's any inclination there. Topside breach, targets are clear, still looking for basically a rally towards like 65, 50s, and 68. So not all that dissimilar from gold being at major resistance. Hell, even silver, okay, in a big region of resistance, 1837 to 1865. We talked about that region back here. It was the high that we made in May of 2017. It was the 618 of the 2016 drop. Held resistance even on a wicked ride way back in September. Remember that. Here we are again. Now we also have the median line also in that region. So all of these commodities are kind of topping out, at least coming into near-term resistances right into the start of the year. It's a beautiful thing. We'll look for a lot more clarity and play off these once we get them. Questions, comments before we close out the session? It's great to be back with you guys. Another year strong 2020. Best of luck to everyone in the room, and I will see you guys on Thursday. Cheers.